Hi, everybody, and welcome to our first day of our FinCrime Virtual Week. Thank you all for attending this demo session with one of our partners, Lexus Nexus Risk Solutions. So in this demo, we're going to talk a little bit about gaining efficiencies through due diligence automation. So before I introduce you to our special guest, just wanted to run into or talk a little bit about, if you run into any issues, I should say, be sure to refresh your browser. If there's any issues that persist, close out and join back in. Chrome tends to be the best browser with these types of presentations or with this platform. So certainly try to use that as a solution as well. Without further ado, I wanted to introduce you to our special guest from Lexus Nexus. His name is Rick Aragon. He is a senior solutions consultant in financial crime compliance for Lexus Nexus Risk Solutions. So without further ado, Rick, I'll let you go ahead and take the mic.
Great. Thank you, Abner. And welcome to the session today. Hope everyone's enjoying the conference. I'd like to talk to you a little bit about how we can gain efficiencies through automation of due diligence data. And when we talk about automation, there's typically two different sides to the question. One side is the technology. The other side is the data itself. And what we're going to focus on today is the data itself. So one of the challenges that we have in the due diligence process is that many times the data that you need or want to conduct your due diligence processes is not available. We see in our interactions with customers that many times the way that financial institutions gather due diligence information is through interviews with the customer. And while that's good data that you're getting, it's difficult to scale, okay? And if you want to automate and gain efficiencies of scale, that's a little bit difficult. Manual processes are complex and time-consuming. So when you're trying to determine, do I need more information, or time has passed and I need to gather information, updated information on a customer, because things change. You onboard a customer on day one, and then a year from now, things could change. The situation of that customer could change. And if you need to go through that whole process again, that can be very time-consuming. So how can we make the acquisition of that data more efficient? And then if we look at how that data is often used in an entire workflow, let's look at the alert management process. When you're gathering due diligence data, there's a reason for gathering it. It's to be able to assess the risk of your customers, and you're able to be most efficient when you're using the data that you gather to assess the risk of your customer throughout different parts of the work stream. And when you get an alert on that customer, is the data that you gathered, one, informing how you alert? Is it able to help you prioritize those alerts? Is it presented back to you when you're reviewing the alerts? And so it's really important not only to be able to gather that information, but then have it available to you at different parts of the work stream. One thing I'll mention as well that speaks to the complexity of gathering this data, and we talk about one of the CDD or customer due diligence data points that our customers often use is negative news or adverse media. And this speaks to how complicated sometimes it is to get the relevant information on your customers. If we look at this graph here, we can see on the y-axis, we've got the breadth of content. On the x-axis, we've got specificity, or how specific is the data to that customer. And if you look at the top, we can see that unstructured media gives you the broadest coverage because it's any data source you can imagine, whether it's structured or not. If you look at the middle, you've got structured profiles. So those are databases. Lexus Nexus has our own database called World Compliance, where we have researchers that will structure the profiles, and it'll make it a little bit easier to screen, reduce the false positives, because you've got a researcher that's curating that data. But the most relevant information can be delivered through what we call attributes. So these are data points that tie us specifically back to a unique identity. And so while you lose some breadth of content, you do gain in specificity. And you can see that curve there with false positives. You're going to have the lowest number of false positives when you're able to get to the attribute level and just look at data that specifically ties back to a unique identity. And the process of determining, is this my subject, really is eliminated because technology has done that for you. So let's talk about how we can put some of these pieces together. Financial institutions in their current due diligence processes gather a lot of great relevant information from their customers. But the challenge is that, again, sometimes the data is not comprehensive. Sometimes it's not the type of information that you would feel comfortable with asking a customer. For example, would you want to ask a customer if they had criminal records? That's not the greatest customer experience. And getting that information on a regular basis so that you can do ongoing refresh of your KYC data is challenging as well. So the idea is, if we can take the best of the information that you gather in your CDD process and augment it with data that we can provide from our public records database in an automated fashion, you're going to be able to put the pieces of the puzzle together. What do we have inside our four walls, even if it's virtual four walls, and how can we augment that from vendor-supplied data? So let's talk about the Lexus Nexus solution, or one of our solutions. We have a number of solutions. What we're going to do is we're going to talk about the due diligence product suite. Okay, so what does it consist of? Well, the first is a series of attributes, the Lexus Nexus due diligence attributes. And what these attributes are, as we'll see in the demo a little bit later, they are descriptive indexes. So what we're doing is we're taking the big data that we, and I'm sure many of your the listeners or the viewers on our demo today are current users of Lexus Nexus online products, and you know how you can go into one of our online pages and look for reports on individuals. Well, we're taking that same data and we're distilling it down into characteristics that describe a customer, but it's a numeric value that describes that information. So once you have everything distilled down to a numeric value, it's much easier to push that earlier in your workflow. Use it in scorecards, use it in waterfall decisioning. rather. So that's what we've done that's innovative. And then we're also taking those indexes, those attributes, and we're creating reports. So you can have an upfront process where you take the attributes through a scorecard, a risk rating methodology, and once you've identified those individuals and entities that you want to get more information about, then you can pull a report. So it ties the front end of a process where you can gain a lot of efficiencies through automation to the back end of the process where you're actually doing the investigation. So what are the common use cases that we see our customers leveraging the due diligence attributes for? Well, one is customer risk rating. That seems like a pretty obvious way to use the attributes. Another is what we were talking about earlier, the creation of automated rules. So if you're in an onboarding process or investigations, you can use these attributes to trigger the creation or the retrieval of the reports that give you all of the information that you're interested in a report format. During the CDD and EDD processes, especially during refresh, where you need to run through a large number of reports, you don't want to incur the cost or the time to run those reports. So you run the attributes first and then really narrow down and pinpoint what reports are you going to use for the investigative process. And then if you're looking to remediate a specific portfolio, it could be an existing portfolio, it could be an acquisition. If you need to go through an acquisition of several million accounts, it's going to be very difficult to get information on those accounts if it's an acquisition. And it's going to be costly and it's going to be very time consuming to actually dig through that. Well, we can solve a lot of that through the due diligence attributes. So that's how we see our customers using them. We have 18 person due diligence attributes, and all of the attributes are categorized by different aspects of a customer identity that are important to understand the risk presented. Things like income or their profession, the assets owned, any issues with their identity, any issues with the geography, what type of geographic risk might be involved with that customer identity, and criminal records, which is something I'll dwell on just in a little bit more depth in a second here. With respect to businesses, we also have business attributes. So we're looking at the same types of things, but there are other things that are unique to a business, like operating characteristics. Where do we see these businesses operating? Do they look like businesses that have a legitimate footprint in public records? Does it look like a business that's been stable over time? One thing that we do particularly well and is relevant from a risk assessment perspective is that we're able to tie business owners and executives back to the businesses. Even if you just submit us the information on that business, we're able to, with our linking technology, bring back who are the owners and executives that we see associated with that business, and then negative information on them. Do they have criminal records? Because that's something that certainly could be risk relevant as you're evaluating a relationship. So I just wanted to spend a little bit more time on criminal records. So we have two different attributes that speak to criminal records. One is what we call state legal events. So these are state level criminal records. They include the information from the courts, information from arrest records, and information from the prisons, so incarcerations. We combine that with information on the offense type. So the state legal event is going to look at the recency and severity of the offense. So at the highest level, current incarceration, the next level is felony conviction within the past 3 years, et cetera, and it goes down. And then you can see the offense type, and we group the similar types of offenses together. So you can see the most egregious offenses at level 9. You have trafficking offenses, whether it be drug trafficking, human trafficking, weapons, et cetera. You have financial fraud at level 7. And these two attributes can be used in a scorecard, so you can eliminate things that are not risk relevant to you. Do you need to see someone that has felony DUI? Probably not. So these are two values that can be used together in a strategy when you're trying to really narrow down risk relevant information. So let's look at some examples of what we can find out from the attributes. We're only looking at a handful of the attributes. As I mentioned, there's 18 attributes for individuals and 22 attributes for businesses. But if you look at these two sample persons, just taking 3 different values from the attributes, you can understand a lot about that individual and the risk that they may present to your organization. So in this case, business associations, you give us the information on this individual and we will return back. Do we see this individual having any kind of business associations? In this case, we do. We see this as a potential owner of a money service business, could be cash intensive business, et cetera. We grouped that type of business together under level 9. And we can see that we've got some legal events here. We've got a state level felony convictions within the last 3 years that is organized, the offense is categorized as some kind of trafficking. So you've got the combination of a high risk business with some kind of criminal records that, again, very difficult to know if you're just asking the questions at an onboarding interview. If you look at this next example here, you've got business associations. This person is now an executive of a law firm, accountant, telemarketing. So a lot of these roles are considered gatekeeper roles where they're high risk because you're a financial intermediary. So that is more of a medium risk. And then you can see here that we've got a misdemeanor conviction within the last 3 years, and it's some kind of financial fraud. So the risk profile of this second person is different than the risk profile of this first person, but you can see that these are 3 numbers that are bringing back a lot of relevant risk data. These numbers are much easier to work with than a full report, and you can push these the data upstream in a process. And then before we get into actually looking at a sample report, I'll just review some of the use cases or the places that we see the attributes being used in a compliance workflow. So the first place is at onboarding. The attributes are available both via API and batch. So at onboarding, we can look at the attributes and we can decide, is there anything that is in and of itself high enough risk that we want to look at it immediately before we continue with the onboarding. Once we get through the onboarding process and you've added that customer, then we can do a batch process perhaps, submit that entire portfolio for evaluation. And the high risk items then can go into investigations. And again, we can leverage the API, this time to pull back the full due diligence report. It's automated, it's integrated, it's scalable, it equals being effective and efficient. So I'm going to go ahead and start sharing my screen, and I'm going to show you an example of the due diligence person.
Rick, while you pull up the report there, and thank you so much for walking us through this, I just wanted to encourage everybody. I see there's a handful of questions in the question box. Please feel free to continue to submit your questions. We're going to go ahead and answer those at the end of this session. And if we don't get to it for whatever reason, we'll certainly be sure to follow up after the session. So go ahead, Rick. It looks like it's showing the screen now.
Great. Thanks very much, Abner. So this is an example of a person report for the due diligence attributes. I'm just going to scroll up a little bit here. So this is a report that's available on our online portals. What I wanted to point out here is that these are all of the different data points that we're using to evaluate the risk of this individual. And in the report, one, we're showing the risk in this bar chart. So you can very easily just determine, once you know what the values of these attributes are, hey, is there something risky here? We can see here that there is a felony conviction that's older than 3 years. We see the offense type of some kind of smuggling. We see extensive value of asset ownership. We've got a luxury vehicle here with a value of $200,000. We've got real property worth $1 million to $5 million. We've got a number of different business associations. So just looking at this part of the report, without even getting into the detail, you can gain a great understanding of this individual. So again, the way it's designed to work is look at these numeric values on the front end of a process and then grab the full report on the back end. That way you can leverage the data, you can pinpoint and filter out what is relevant, and then pull the full report so that you get into this rich information. I'm going to go ahead and use the hyperlink on the side of the report here, and then we can look at the detail behind the criminal. We would call this legal events. They include both civil and criminal, but I'm going to just focus on the criminal records here. So you can see here for this individual, we had a number that represented the highest value of the state legal events. That's a felony conviction, 3 years or older. And then the offense type, which the highest value in this case was level 8, which is some kind of trafficking offense. Now we also look at other types of offenses. Murder and homicide, for example, is here as well. But one of the things that we often see is that for financial institutions, the more risk-relevant offenses have to do with financial crime. So we're including this, but we actually have higher level events here for drugs, especially trafficking drugs, because that generates revenue for that individual that ends up getting laundered through our financial system. Okay, so you can see here that we've got a lot of information that would make you look at this individual twice and say, hey, is there risk that I should be reflecting in my risk rating? Do I need to monitor this individual more closely? I'm just going to go through one more and then we can get to the Q&A. We've got a lot of information about individuals that are related to your primary subject. So we've got person associates, and you can see here in this report, we're telling you whether there's criminal records associated with those persons. And then we have business associations. So you've got a number of different businesses tied to this individual. You can see here in this example, and it's actually, this example is based on a real person. And it was interesting when I first saw this, I saw that there was a lot of diversity in the types of businesses. And so that, raised a little bit of a suspicion in my mind, because not all of these looked like they were similar. We had jewelry stores, industrial supplies, construction equipment, beauty shops. That's interesting. A lot of times beauty shops are they're cash intensive. They could be a front for integration. It could be also related to human trafficking. A lot of times, these types of businesses are used for that kind of illegal activity. So in any case, I wanted to show this to you today. What I wanted you to take back with you is that a big part of your ability to automate these processes lies in the data and how it's formatted. And with the due diligence attributes and reports, we've created a system where you can automate information on the front end so that your back end processes, where most of your cost actually is centered, become much more efficient. So I'm going to go back and look and see if I've got any questions here in the Q&A.
Yeah, and while Rick, while you go through the questions that we have, I know there's quite a few. We'll go ahead and leave you with a question from the Lexus Nexus team. We'd love to hear from you and understand when is sort of the appropriate time to connect and share more about their solutions. So please fill out the survey question that you see here on screen and let them know when you'd like to hear and learn more. So Rick, go ahead and take it away with any questions. It looks like we may have a decent amount of time here, about 6 minutes or so, until we jump into the next session.
Okay, so we've got some good questions here. The first one is, do you encounter that most FIs do adverse negative news on every individual at onboarding, or do they use a risk-based approach of adverse or negative news screening only for high-risk KYC-rated clients? I would say what I've seen is mostly it's risk-based. Traditional ways of delivering adverse media or negative news make that almost a necessity, because the operational burden imposed on massive screening for adverse media or negative news makes it just very difficult to screen an entire portfolio. That's where I think the due diligence attributes have really benefited our customers, because since we are delivering information back tied to an identity, it's not just a name match, it's not just a name and date of birth or address match. It is this specific identity tied to these specific criminal records. We've had customers that have extended their screening to all onboarded customers because they can get much more specific. And so the operational burden imposed by that, extending the screening to all customers, is minimized. And you have actionable intelligence for every hit that you get for the attribute. So that was a good question. Appreciate that. Let me just look at some of these other questions here. Are risk attributes averaged to give overall risk? No, the way the attributes were designed is to evaluate each attribute in a consistent way. So whatever we're looking at, if we're looking at assets, a 9 is always a 9 across the entire portfolio that you're evaluating. And then you can take those values and you can plug them into your risk rating methodology. Not every 9 is going to be the same. So we basically look at 9 as the highest level, and sometimes that indicates higher risk. Other times it just indicates more of whatever we're measuring. So when we're looking at assets, 9 means, more assets, higher value assets, more real property, higher value vehicles, those kinds of things. 9, as we saw in the criminal records, means higher risk there because you've got current incarceration, or you've got the highest level in the offense type, the riskiest and most egregious offenses. So we don't actually create that kind of composite value, but we give you the building blocks to create your own risk rating, and you can be, very specific to the type of risk that you're trying to mitigate in your use case. Let's see what else we've got here. How do you suggest clients address the variable accuracy of the content, for example, by geographic risk region, accuracy, depth of data by time period, et cetera? Well, so for Lexus Nexus data, we do have information on coverage that's available through our portals and our documentation. So, as anyone that's worked in public records, that there always are questions that need to be answered about coverage. Generally, I would say it's a best practice to include that in your strategy. Where there are gaps, you need to acknowledge that. You need to have that part of your data acquisition strategy so that you can target, hey, we've got information that is not available through this source. We need to go to a different source, or maybe it's simply not available. A lot of the information that you're going to get through customer interviews might need to be corroborated, or you might want to corroborate through third-party data. So, the data itself, you need to make sure that it is verifiable data if you're getting it from a vendor, but you also need to do the same thing, when you're getting it from your own customer, because customers, they're mostly truthful. Most of our customers are good customers, but even customers that are truthful may not understand the importance of the data that you're asking them for, and they may not offer up the best response for helping having you assess the risk of the customer.
Fantastic. And with that, Rick, I know we've got a ton of questions, which is exciting to see. Glad to see there's a lot of interest in Lexus Nexus risk solution, what you guys offer. With that, we are going to sort of cut it short here. We're right up against the clock. Wanted to thank you, Rick, and your team for sharing a lot of this knowledge and your solution with everybody. Just as a reminder for everybody on this call, the next session is starting in just about a minute or so on CDD and KYC. Rick and his team will be following up. For those of you who didn't get your questions answered, no worries. They'll certainly be sure to reach out. So thank you, everybody, again, for attending this session, and looking forward to seeing you attend the remaining sessions today and the rest of the week. Thank you, everybody.